Madhu Kela of Reliance Mutual Fund is also with us now. Madhu, put on a smile. Put on a smile, please. At least today you can smile, Madhu.
No, absolutely. It was very difficult defending it at 2600. So I can smile all the way.
Absolutely. So, is there life beyond 4200 or would you get cautious like some of our analysts here?
No. I'm not cautious at all with them. I think the country is in an inflection point. I think a lot of people will still worry about what happens to global sentiment and markets may have run up too much. I think this has been an unprecedented verdict. This will give the party the ability to act. I just fear that, they should not be slower than what the market is expecting them to do. That's the only thing. But whether they will do it or not, I am extremely confident that they will do it.
Madhu, first good to see a long-term die-hard bull thumping his chest and saying, yes, I'm still positive about the market. Tell us, tell the people who doubt the rally why this verdict is equal to good news for the equity market.
See, Vitali, I think the first thing is that as a portfolio manager, what we have learned is whatever is outperforming, the world will get towards that outperformance. So India is going to be one country which in the global world map is likely to outperform. And I don't know, what happens after 2 days or 5 days. This has been an investor's delight, complete delight for an investor who is wanting to invest into India from a 3-5 year perspective, and which is what we have been poaching about. The other thing, I think I've been watching your channel. I expect $50 billion of flow over the next 12 months. And these are not FII flows. Please don't mistake me. Whether it comes through ECB, FCCB, FDI, there will be $50 billion of additional money. And as a capital-starved country, that is what we need. I think once the money comes in, then you will have lower interest rates, then you will be able to build your infrastructure. So, only thing is the government should allow a policy framework to attract this money. And considering the crisis which is going around in the world, this is the best time for us to attract this capital.
Madhu, what about the cash which people have been sitting on? Not just mutual funds. I mean,
I am one of them, Udayan.
I know, but that is not my question.
And we appreciate your candor as well about that.
My question is not about that. I mean, you talk to a lot of hedge funds, FIIs, HNIs. Do you think now they'll just throw in the towel and come in? I mean, a lot of people were holding out at 3,100, at 3,700. Now, do you think it will be forced to enter the market?
The best comment which I heard in your channel, the left is out and people are left out. So I think Udayan, our job in our business is such that people might be in a denial for some time. The markets have run up too much with 2600 Nifty is already at 4,000 or 4,100. You will be out of the job if you don't deploy it. Who has seen the market could go 20% and if you continue to remain in cash, you will be out of the job itself. So I am sure, the bigger concern is from the hedge fund side. People who are running 10%, 20%, 30% net long, and people who have left India. If there is a particular hedge fund which is 50% net long India, and there is another hedge fund which is only 10% net long India, he will have no choice but to come and invest.
You will as well, Madhu? Between 42 to 4,500, you will buy the market?
Mitali, as I maintain, our portfolios we have not changed. We have not changed our style. In a lot of the funds where we need to be invested, we are 80, 85, 90% invested. So, we will get, and I think now is our turn. Now you will see mid-cap flying. Now you will see stock ideas flying. I'm sure we'll be able to catch at least a lot of them because of our view that from this inflection point, even if I buy it 10, 20, 30% higher, it doesn't matter because now we are playing really as an investor's delight.
That's an important point, Madhu. I wanted to ask you about that as well because a lot of people will now think that because FII money will now chase performance, you will see the large caps outperforming. But for a portfolio manager like you looking for outperformance, do you think there's better value in the broader market now and you can actually generate good performance by buying those stocks which are still trading at 25% of their peak value?
Precisely, Udayan, I think the biggest performance, if you see, whichever portfolio manager has gone into caution, and I speak to a lot of them, they have reduced the number of stocks. What people have ended up selling up is small cap and mid cap names, because obviously everyone was cautious. And in these stocks, as you know, the float is very limited. So that is where I think maximum outperformance is going to come from, which may not be the top 50 companies, but the companies below that, the next 100 companies, where the size is large and the ownership is negligible.
The thing that this keeps coming back to, though, Madhu, is the argument about what this past 50-60% on the market looks like. Does it look like the most resounding bear market rally we've ever seen, or have we indeed put the worst behind us and begun a new cycle, which most people are very circumspect to admit to or to agree to? Where do you stand on that?
Maybe now if you see, let's just go back to the bull runs which have happened in the world. Let's just go back for a moment to a Japanese bull run. Between 1973 and 74, Japanese market corrected by 50%, and people thought that the bull run is over. Okay, and after that, the index went up tenfold. Now, I see that is the kind of opportunity which we have for India, that there is so much chaos which is going around in the world, and here is one country where you have a stable government for the next 5 years, and they are committed to providing proper governance. Obviously, we have seen that in the last 5 years. So what kind of money could you attract? And as I keep saying, if we get capital, then our job is done. I think so. I am in the second camp who believe, yes, Mithali, just to put it differently, October Nifty was 38,900. So only 6 months time has passed by. And if you ask too many people what happened in the global crisis in October, were you willing to buy? Most of the people were willing to buy. So it is going to take some time for people to digest whether after such a big rise should we be participating or not. But I think it's a matter of time before people will aggressively participate. And let me make one very important point here. All the people are only talking about the cash which the portfolio managers are holding. What about the cash which Indian public is holding? For last 18 months, we have not seen any inflow from Indian public. And we have seen $300 billion of saving in last 1 year.
Fair point.
What happens to that cash?
That is feeling really lousy, Madhu. Much lousier than you are feeling with 15% cash at this point in time. And it will come in, I'm sure.
Yeah, I'm sure. That's what my point is, Udayan. And what we have seen in the last 10 days and what I fear for investors, and which is what I want to communicate through your channel, what a lot of people are thinking, that 2600, now we are at 4000, market is up 50-60%, we did not get a chance to get out, this is our opportunity, golden chance, let's get out. I think some retail investors could commit that mistake. In fact, this is an opportunity. And I'm not saying the market is going to go in a perpendicular manner. You may have some disappointment coming from global cues at some point of time, but every dip is an opportunity to buy from a retail investor point of view.
What themes would you like to back now, Madhu, from here? Would you back banking as the recipient of, or likely recipient of most reforms from the government? Would you back infrastructure? Would you back PSU candidates for divestment? If you wanted to play this government formation and the budget, what would your best bets be?
So I will answer it a little differently, Udayan. I think so much has been talked about in your channel in last 2 days. I don't want to repeat the same thing. So I think I am going to back entrepreneurship all over again. So you have to back bottom-up companies where there is an extremely aggressive, smart entrepreneur who wants to grow. Capital was an unavailability for that person during last 12-24 months. Capital will become available for him. So I think that is the theme number one, that can you really catch a proper entrepreneur? And then obviously, if you can get that entrepreneur into growth sectors, whether it is infrastructure, whether it is anything which is likely to do with the domestic story, And now the other point is there is going to be a lot of performance difference between intra-sectors. Like as I said, if I am right that if $50 billion comes into this country in the next 12-18 months, then you are seeing at least 15% appreciation in rupee. So there are a lot of sectors which are going to get hurt because of that. So you will have a differentiated performance, the domestic sectors, and the things which is linked to investment and domestic consumption and infrastructure will all over again do very, very well. While things which are linked to international and rupee appreciation will not do as well, or will do badly rather, relative to the market.
There's still
So
concerns
we would
about...
like to position ourselves into great entrepreneurs in these sectors which are likely to link to India.
There's still concerns about earnings though, Madhu. I mean, as an event, would you say this is an event that has repriced equity upwards, or are we, stretching the argument over there?
Mitali, earnings will follow. As you have seen last, 2 weeks, 2 real estate companies which are supposed to be in the darkest of the time getting money, ahead of this event, basically. So earnings will follow. Once people get money, once people are able to invest, earnings will follow. We saw that in 2004. A lot of these capital goods companies were trading at 20, 30, 40 P multiple. But as the money started to come in and as they started to invest, earnings followed 1 year or 2 years or 3 years down the line. So what people were focusing till now, including me, I'm not, we are absolutely part of the crowd this time. What people are focusing as to what is going to happen next month or next 3 months. I think that trajectory is going to change, and people are going to focus now what is going to happen after next 1 year and 3 years. And that is where you see a lot of difference, and you will see people who are skeptic about earnings and immediate earnings. That will wane away as a matter of time.